Hey, what's going on, traders? Thanks for checking out this video. My name is Travis from Master the Market. And in this one, I want to break down exactly how we caught this big over 200% runner for the day earlier on in this week. We were able to catch this at about 65 cents before it had this big run up to a high of 125, not even a few hours later. And we actually had some team members in the Market Master group bank on this trade. You could see that we said ATXI may be coming back to life after fading all pre-market. Watch for a break over 65 cents. And following that, it was able to break out and really never looked back before it hit that 125 high. So in this video, I'm going to break down exactly what led me to believe that this was going to break out and have that big run to the upside. So what this strategy is known as the opening range breakout. And it is a very simple strategy, but it can be really useful for people that like to trade gap ups and gap downs in the stock market. And the entire idea of this strategy is to wait for the first candle to completely form after the market opens. And that can be either on a 1-minute chart, that can be on a 5-minute chart, a 15-minute chart, really whatever time frame you'd like. For me personally, I tend to avoid the opening range breakout on the super short time frames like the 1-minute chart. But in this case with ATXI, this happened to be on the 5-minute chart. And the idea here is to let that candle completely form. And what that's going to do is give you a range for the open. So if we go ahead and draw our range here from the high of that candle down to the low of that candle, that is of course going to be our opening range. And the next step with this strategy is to simply wait for the stock to either break out to the upside or break down to the downside for us to go either long or to go short on this stock. Now in this case, we were already closely watching ATXI because it was a big gap up from the previous day. If we take a look at the pre-market action and the after-hours action from the previous day, we can see that it had this big spike up here from about 30 cents all the way up to a high of 136. Now, there was no news to kind of justify this spike up in the stock, but at the end of the day, when a stock is a low float and there's a ton of volume coming in, you don't necessarily need any news to justify a move. So if it is breaking out, it can be a really great opportunity for you to buy into that stock and profit from that stock's momentum. And that's exactly what happened here with ATXI. We saw this opening range form. We said to watch for that breakout over that opening range at about 65 cents. We get a big spike in volume, the stock breaks out, and ends up hitting a high of 125, not even a few hours later. So the reason that I like this strategy so much, and I do highly recommend it, especially for new or inexperienced traders, is because first, what it does is forces you to be a little bit patient with your entries into the stock. One thing that a lot of new traders do is jump too quickly into trades as soon as the market opens because they kind of have this fear that they're going to miss out on a stock running, or maybe they simply just get impatient. And a lot of times what that can do is lead to some big, very unnecessary losses in the stock market. So again, with this strategy, you are forced to kind of wait for that first candle to completely form. And the other very nice thing about this strategy is after that first opening candle forms, not only do we have a high of that range for a breakout level, but we also have a low of that range that we can then use as a risk level in case the stock ends up failing to break out and ends up coming straight back down. At the end of the day, no strategy is going to work 100% of the time. So if this stock happened to have a false breakout and then come straight back down, what we could do is use the low of this opening range at about 57 cents as our risk level to then cut losses on that trade, which is going to be very helpful for keeping your losses small and managing your risk with your day trades. Now for another example, we can also take this same strategy and we can apply it to short selling. So if we go ahead and take a look at the stock KPTI, we see that KPTI the other day had a very big gap down. And actually, if we take a quick look here at the news, KPTI did have some news that caused the stock to gap down in the first place. And what that news was the company receiving feedback from the FDA that their study results would not support a supplemental new drug application approval. On top of that, the company and the FDA participants had differing views on the study significance and overall clinical benefit for the whole population. Obviously, those things are going to be bearish for the stock, and that is exactly why we saw this big sell-off in KPTI. But if we take a look here at the opening range, we can see we have a high up here of about $7.60, and we have a low of $7.24. That is going to give us our opening range. From there, all we do is wait for a breakout to the upside to go long, or a breakdown to the downside to go short, which is what we end up getting here with KPTI. So with this example, what we would look to do is short sell on this breakdown here. And as you can see, this example kind of trades sideways for a little bit. It looks like it may end up reversing to the upside right here. But with this strategy, again, that's not going to be a problem because what we would do is simply use this upper range as a risk level to cut losses on our short position, just in case this stock does end up recovering and starting to bounce back to the upside. But this would have played out perfectly for a short position because we can see that it ends up crashing back down and going significantly lower throughout the day, actually hitting a low of $6.06 later on in the day. So you could have easily made over $1 per share in profit on this short position just by using this opening range breakout trading strategy. Okay, so if you are looking for something to kind of help you take advantage of these stocks at the market open, this is one strategy that I recommend you try out yourself. It is, of course, very beginner friendly because it gives you a clear level to buy the stock as well as a clear level to cut losses on the stock if the trade happens to move against you. And I do want to say that if you are looking for help and maybe you missed out on the big run in ATXI, don't worry because the small cap market is on absolute fire right now. So there's going to be plenty more of these in the near future. And to make sure that you catch the next one, make sure to join us in the Market Master group, which will be linked down below in the description. But anyway, that's going to do it for this video. Hopefully you learned a thing or two and found some value in it. If you did, please make sure to give the video a like and subscribe to the channel. But anyway, thank you again for watching. I hope you enjoyed and good luck with your trading.